CC completely folds. Ripple and XRP respond. Did you know that the SEC's lawsuit against Ripple could impact over $1 trillion in crypto market value? Yeah. This legal battle is no more just about Ripple and its XRP token. It's literally a defining moment that could reshape the regulatory landscape for digital assets in the US. In this video, I will tell you about the latest developments, exploring the implications of this case for investors, and of course, the future of cryptocurrency itself. Overview of the SEC's lawsuit. In case some of you aren't familiar, on December 21st, 2020, the SEC filed a lawsuit against Ripple Labs, claiming that the company raised over $1.3 billion through the sale of unregistered securities. In other words, they were accused of playing fast and loose with the rules, selling what the SEC deemed to be securities without going through the proper registration process. This is a big deal because, in the eyes of the law, securities come with a whole lot of regulations and requirements. Ripple's CEO, Brad Garlinghouse, didn't take this lying down. He described the lawsuit as fundamentally wrong, both legally and factually. He even took a shot at the SEC's former chair, Jay Clayton, for announcing the lawsuit during the holiday season, saying he was taking notes from the Grinch. Sarcasm level, expert. Okay, let me tell you why this lawsuit is such a big deal. Ripple has always had a bit of a controversial status in the crypto ecosystem. Unlike Bitcoin and Ethereum, which are decentralized and mined by a network of participants, Ripple's XRP is pre-mined, meaning all 100 billion tokens were created at once. To put it in numbers, Ripple initially allocated 20% of the XRP tokens to its founders, set aside another 20% for trading, and held a whopping 60% in escrow. Critics argue that this setup is a red flag and flouts the Howey test, a legal standard used to determine whether an asset is a security. The SEC argues that Ripple created an information vacuum, only sharing information that suited its narrative while withholding important details from investors. Essentially, the SEC claims that Ripple was selling XRP while keeping investors in the dark about the risks involved. I mean, a classic case of buyer beware, right? The SEC also pointed out that Ripple's executives, including Garlinghouse and co-founder Chris Larsen, engaged in personal transactions worth around $600 million. Ripple's response and claims. Of course, the company fired back, claiming that XRP is a fully functional ecosystem and a legitimate bridge currency that doesn't rely on Ripple's efforts for its functionality or price. They argue that XRP has real use cases, especially in cross-border payments, which is what Ripple was originally designed for. Garlinghouse even pointed to a previous settlement with the Financial Crimes Enforcement Network, FinCEN, in 2015, where Ripple paid a fine for violating anti-money laundering laws, but did not admit to any wrongdoing regarding the classification of XRP. This is Ripple's way of saying, hey, we've been here before and we're still standing. And you know what I think? Ripple's strategy seems to be paying off. In a major ruling earlier this year, a judge stated that XRP sales on public exchanges do not constitute the sale of securities. This was a huge win for Ripple, and the XRP token even surged as much as 80% in response to the news. However, the SEC is still fighting tooth and nail, and they recently filed a letter with the court seeking leave for an interlocutory appeal. That's lawyer speak for we're not done yet. The SEC argued that the judge's ruling involves controlling questions of law on which there is substantial ground for differences of opinion. Basically, they're saying, we think the judge is wrong, and we want a chance to prove it. Brad Garlinghouse, in response, went so far as to say that the SEC's recent filings are an admission of defeat, the SEC's struggles and changing arguments. But if we're being honest here, I think the SEC has been struggling to establish its case against Ripple. You see, Ripple's legal team has accused the SEC of moving the goalposts and changing their arguments throughout the case. I mean, come on. This is a crucial point because it raises questions about the SEC's confidence in its position. For instance, the SEC initially focused on the idea that XRP was sold as a security. But as the case progressed, they shifted their arguments, suggesting that XRP's status could change based on how it's used. And like I just mentioned, the SEC is also accused of creating an information vacuum. To make matters worse for the SEC, they've been facing an uphill battle in the courts, losing major rulings. I think this kind of inconsistency can be seen as a sign of weakness, and Ripple is capitalizing on it. More latest updates. As of August, the Ripple versus SEC case has taken some significant turns. Just last week, Ripple's legal team filed a motion for summary judgment, arguing that the SEC has failed to provide sufficient evidence to classify XRP as a security. This motion could potentially lead to a swift resolution of the case, allowing Ripple to move forward without the cloud of litigation hanging over its head. Additionally, the SEC has recently faced scrutiny regarding its regulatory approach, with industry experts and lawmakers questioning whether the agency is overstepping its bounds. There are growing calls for clearer guidelines on crypto regulations, and this case has become a focal point in those discussions. Brad Garlinghouse has pretty been vocal in the media, emphasizing that the outcome of this case is not just about Ripple, but about the future of the entire crypto industry in the US. He argues that a favorable ruling could set a precedent that benefits not only XRP, but also countless other digital assets that are currently navigating the murky waters of regulation. He also believes that merely winning against the SEC in court is insufficient to alleviate US banks' concerns about cryptos. There needs to be a transparent regulatory framework in place. Potential outcomes of the case. Okay, so we've covered the SEC's lawsuit against Ripple and Ripple's feisty response. But what about the potential outcomes of this legal battle? Let me start with the worst-case scenario for Ripple and XRP. If the SEC somehow manages to prove its case and convince the judge that XRP is indeed an unregistered security, it could spell disaster for Ripple. Yes, the company might be slapped with a massive fine, potentially in the billions, and could even face restrictions on its business operations. Other crypto projects might be forced to register their tokens as securities, leading to increased regulatory scrutiny and potentially stifling innovation. Like a domino effect. Okay, next scenario. If Ripple manages to prove that XRP is a currency, not a security, it would be a huge win for the company and a major setback for the SEC. Ripple could potentially walk away scot-free, with no fines or restrictions on its business. For other crypto, I think it could lead to more favorable laws with less uncertainty and more clarity. Of course, there's always the possibility of a settlement between the two parties. I think this is more likely to happen. Both the SEC and Ripple might realize that a prolonged legal battle is not in their best interests and decide to reach a compromise. This will involve Ripple paying a fine, not too much, but without admitting any wrongdoing, and the SEC agreeing to classify XRP as a currency rather than a security. Yeah, A settlement might not be as exciting as a decisive victory for either side, but it could still have implications for the crypto industry. It would show that the SEC is willing to work with companies and find mutually agreeable solutions, rather than taking an all-or-nothing approach. Call for clarity and consistency. Speaking of regulations, there's a pressing need for clarity and consistency in the crypto space. The Ripple case highlights the confusion that currently exists within the regulatory landscape. As Christine Parker, a partner at Reed Smith LLP, pointed out during a congressional hearing, one regulator says that a crypto asset is a currency, another said that it is a security, and the outcome of that is incredibly harmful to retail customers. The irony here is that while the SEC is trying to protect investors, their approach may be doing the opposite. By creating a vague and hostile regulatory environment, they're driving good actors away and leaving the field open for bad actors. This is a classic case of cutting off your nose to spite your face. The bottom line is simple. If the US wants to remain a leader in the crypto space, it needs to establish a comprehensive framework that clearly defines what cryptocurrencies are and how they can be used. Otherwise, we risk losing our competitive edge to countries that are embracing innovation rather than stifling it. Future predictions and market impact. Okay, before we wrap up, there are some predictions. If Ripple emerges victorious in its legal battle with the SEC, we could see XRP's price soar. Some analysts are predicting that XRP could reach as high as $5 or even $10 if the case is resolved favorably. That's a huge jump from its current price. For context, XRP was trading around $0.5 in early August 2024, meaning a win could represent a 1,000% increase in value, and that's a wrap. So, what do you think? Will Ripple emerge victorious, or will the SEC tighten its grip on the crypto market? Do you believe that Ripple will be able to reach a settlement with the SEC and prove that XRP is not a security? Share your thoughts, predictions, and any questions you have in the comments below. Before you go, don't forget to check out our recent video on XRP investors. This might leave you empty-handed. Make sure you hit that subscribe button and press the bell icon. Thanks for watching.